Hello, everybody. Brian Hoops with Midwest Market Solutions, bringing you our monthly webinar for February the 8th. It's just this afternoon after the supply and demand report. I'm joined by Howard Cottle from our Yankton, South Dakota office. Howard, thanks for joining us. Always great to have you on.
Thanks for having me, Brian. Appreciate being here today.
You bet. We have not done a webinar for quite some time. USDA did not have much of a report back in December, just some demand numbers. Of course, they skipped the January report because of the government shutdown, and so we had a lot of information today. And I was telling you off air, Howard, I was fully expecting a lot of fireworks, some big moves in the markets today, and I think a lot of people were hoping for that same thing because we had been so quiet in all of 2019 with very little movement, and that just was not meant to be today.
Yeah, for sure. I'm right there with you. Kind of expecting some way to get out of this real tight trading range that we've been into. The big one side is all the political things that are happening. The other thing was the pile of information we got from USDA today. And we're kind of stalemate still with the information that we got and the unknown uncertainties about what's going on with our deal with China. So yeah, I'm right there with you.
Yeah, we'll go through some of these numbers here real quickly, but we'll have all the information as far as numbers go in our daily and our weekly newsletters. You can find all that information there. Our purpose today is to talk more about what producers should be doing with their corn, soybeans, and wheat based on these numbers and based off of what we expect to happen down the road here. U.S. grain stocks were lowered in corn and soybeans compared to the last month. If you look at the USDA column, we were down from last month while wheat stocks were increased. Production summary here. I think the trade was looking for a smaller corn number and got it. In fact, had a fairly bullish corn number at 176.4. Production still at 14.2. So we are down compared to last year's production in corn. Soybeans, we are a little bit larger than last year, but it just seemingly had very little impact on today's trade direction, as we just really didn't find much in the way of direction off of these lower yield numbers. So I think the trade was a little disappointed in that. Looking at the quarterly stocks, these were out as well. These were as of December the 1st. Corn stocks still have a lot of stocks on hand, but not as much as last year, just below 12 billion bushels. Soybean stocks a little bit larger and wheat stocks a little bit larger than a year ago as well. Our world production numbers, and I think this is maybe one thing that really capped the rally today. Corn in Brazil larger than expected, soybean production larger than expected, although down from previous months, while Argentina corn also bigger than last month, and soybean production just almost exactly the same as a month ago. Any comments on any of these slides, Howard? I can go back if you lead me to.
No, I think you're dead on. The last slide that we're looking at, the world crop production estimates that came out today, in line on the Brazilian side. Definitely a little bit less than a year ago, and not the 125 to 130 million metric ton that maybe they were trying to push to us early in their production year, just due to the weather and the things that happened there. We got the lower number, but just a touch about the average trade, guys. But the one that probably stuck out a little bit was the Argentine corn production, up 3.5 million metric ton for USDA to make that adjustment somewhat early in their production growing season. Clearly shows us, they're looking at the vegetation down there, they have a lot of rain. Clearly that production down there is going to be much greater than it was a year ago.
Yeah, this is one thing that really stands out from this report is you look at Argentine corn at 46 and Brazil at 95.5, and you compare it to last year, and these numbers are far and away exceed last year's productions. You remember last year, producers remember last year we had a decent export profile all the way through the spring and into the summer because largely Brazil and Argentina were out of the export market due to some drought-like conditions. And even their soybean production was hurt last year, which helped us to see much better soybean exports. I think that's going to change dramatically. If these numbers that the USDA gave us here today, and kind of put a little mark by that, if these numbers are realized, this, I think, really puts a damper on any U.S. Corn export forecasts profiles going into the spring. I think our export numbers slow down considerably from where they are currently at.
Yeah, no, I definitely agree with that, and that's kind of the overall bigger picture that you got to look at is exactly what you just discussed right there. The production this year clearly much greater than it was a year ago.
And then we have our world ending stocks numbers here. I think soybeans did find some support off of this number at 106.7, well below the average guess, down from last month. It is a little bit above last year, but it was enough of a surprise to give us a couple cent rally into the close. The wheat stocks numbers very similar to last month. Corn stocks very similar. It was that soybean number that was a little bit of a bullish surprise that probably helped firm that market going into the end of the day.
Yeah, and that's clearly an indication of where Brazilian soybean crop is at. We're not at the 120 plus level. We're down below that 117, I believe, is the number we posted, and who knows, that might tighten up just a touch more as well. But that's probably where the 106.7 is coming out of.
When we look at the individual crops here, there's not a lot to glean out of this. Certainly a production was lowered compared to last month. Also, ending stocks were lowered a little bit by almost 50 million bushels here. Exports were down just a little bit. Not many changes in here. Crop size, 1.735 billion bushels. Certainly a little bit tighter. It tightens up the balance sheets a little bit. But if curiously, the USDA said 2.45 billion bushels is our export forecast. That's above last year. And if we're correct that Argentina and Brazil grow a much bigger crop than last year, I don't see any way we come close to hitting this 2.45 in corn exports for this marketing year, Howard.
Yeah, that is a number in question, and maybe USDA, what they're still thinking is we'll hold that number at that level until we get a little more proof going down the road that South American production is there, which it sure acts like it's going to be. And then where does the purchases then come from? One thing I would maybe throw out there is that there's been rumblings, and who knows, once we get a deal with China, that maybe they will import corn from us, which would be corn and the ethanol potential. And maybe that's why they're keeping that up there too. Maybe they're signaling something's coming down the pipe, of which we have no idea right now, but would be in agreement with you totally is if we don't see any sort of deals or any new export business, and I say new, I mean talking about the DRC taking on some of that product, that number surely would probably come down.
Yeah, absolutely. And one chart I thought was interesting, even more on soybeans we'll look at in a second, but percentage of corn stocks on hand as of December the 1st, we certainly have had much more corn on hand at certain times of the year, but we've got a lot more than what we did in 2012. A lot of this is pretty much where we've been over the last several years as far as corn stocks.
Yeah, me personally, being a farmer, probably holding in just a touch more corn than I have in the past. Usually I'm a little more aggressive in December and January to get things going, open up here. I'm going to contribute that to the MFP payments that we received on soybeans and that 1 cent on corn. It wasn't much, but it sure gave us cash flow to say, hey, maybe we'll hold out for better pricing in this spring. And I think that's what we're going to contribute the on-farm corn stocks and, for that matter, soybean stocks too.
Absolutely. We're going to look at the soybean stocks here in a second. First of all, the revisions to the U.S. balance sheets for soybeans. Our ending stocks was tightened up by 45 million bushels. Most of that was due to production shortfall of 56 million bushels. They did lower the U.S. exports by 25 million. That's a step in the right direction. I think even with an agreement is reached with China, we're still going to be hard pressed to reach this number here. We really need to be averaging nearly 40 million bushels each week to hit this forecast by the USDA. But we'll see if we can do that. An agreement with China would certainly be positive, and that's likely why the USDA didn't change their export forecast very much. But as we look at the percentage of stocks on storage, this is the highest we've had since going back to about 2009, this marking year, as we're nearly 52% of soybean stocks are sitting on the farm. And Howard, from your situation or your perspective, where are you at, or what some of your other farm friends or clients talk about, where are they at versus corn versus soybeans on farm storage?
Yeah, I personally, where I'm at is we used the last rally we had up in these 9+ areas to liquidate that on-farm storage, and I liquidated it out personally due to the fact that I wasn't seeing a deal resolution per se getting done. Basically took my $1.65 MFP payment, added to the few hedges that I had on going through last summer, and looked at it from a total gross dollars perspective and said, even 55 bushel of beans at $10+, given the fact that we got the MFP payment on top, said I'm going to cash that out, remove that risk, and just start looking at this next year's crop for me going forward. Now, that's probably not the norm, obviously, due to the fact we see the big on-farm storage is up, but I encourage guys to really take a sharp look at what they grossed out in dollars for the 2018 crop in regards to soybeans, and say, hey, once you've done that, if you did produce, more than likely you're going to show profitability, and use the rallies that we get, 5, 10, 15-cent rallies, to step up and get rid of this inventory. It's just going to be a burden down the road as we move into the spring. So that's my position on these on-farm stocks.
So what is it going to take, do you think, to get this product to move from the farmers? A lot of them seem to be entrenched with crop on storage in the bins and waiting for much higher prices to come.
Yeah, and that's kind of hopeful thinking there. Clearly back not too far back, we were up in these ranges. If we look back in the I'm just looking at my chart right now, but we were up in the the 930 range on the March contract, and if you take a 70-cent basis off that into a Cargill or something like that, you're sitting in that 850 range. Add the $1.65. I think if we had to put a number together, if we can muster back up in that 930, 940 range again on March, the lead contract, futures contract, I do think we got to honor that and move this inventory, as the picture going forward is clearly not friendly.
Right. Yeah, we highlighted some big U.S. stocks on hand in both corn and soybeans, and wheat for that matter. There's not much friendly, or not much to get really excited about, unless you're banking on some major weather problems in South America or in the United States. So, yeah, I think you're exactly right, Howard. Yeah.
And I'd go with that. And when you look at that South America crop, keep in mind where they're at. Harvest in Brazil is pushing close to 20%. That crop, that period of time where we can kill that crop down there is definitely shrinking. That window's closing, and we could still have some issues maybe in Argentina, but South America weather come February, or once February comes and goes, it's pretty much going to be what it's going to be. So crops getting made, full attention will turn to the U.S. Acreage, and then the spring planting intentions and how we get going in the spring. So yeah, it's a tough nut. We need a production problem in one of the hemispheres, and it's not a small production problem. We need something more major.
Exactly right. And we're, like you said, we're running out of time for one down south in South America. And we've got a long growing season ahead of us. So either you have to play it from the standpoint you need to be making some sales and then do some reownership strategies, or you're waiting, I guess, for a weather problem going into the spring and summer. But prices could certainly be dramatically different than where they are at this time frame. So let's take a look at wheat and had some revisions here. Did lower the export forecast and overall by 36 million bushels, accounting for the ending stocks increase of 36 million. So we're back over 1 billion bushels of stocks. I thought the one thing that the trade would react more towards is wheat acres being planted here. 31.29 was almost 900,000 less than the average trade guess, and it is over 1 million less than a year ago. At one time, I think there was an intention early in the fall, September, that producers would plant more wheat acres, and because of weather conditions during the fall, they decided to plant less acres. Out of our breakdown here, hard red winter 22.2 million, a little bit less than the average trade guess, 700,000 less than a year ago, and soft red wheat, where Chicago's traded about 300,000 less than the average trade guess, and maybe 400,000 less than last year. Question, Howard, if we are planning less winter wheat, 1.3 million less acres, what crops are going to be planted more acres? What's going to pick up that production shortfall?
Yeah, my estimate when I look at the reductions on the wheat planted acres, I look at the states, and it was pretty much in the plain states up and down and then out east. So it's almost like a big U. I think Illinois probably carried a little bit more. Iowa carried a little bit more wheat acre plantings, but kind of to me, it's in the areas that are fairly wet. And if I'm a betting man, I'm going to be watching the spring weather. So if the spring weather seems to be wet in March, April, or pushes corn plantings back, it's going to be difficult to add in additional wheat acres, say like a soft red. But who gets the acres that didn't get wheat planted too? Obviously, if we get that spring wetness going through these areas and in this Midwest area where we live, obviously that'll go to beans. And I would say if it's out east as well, it'd have to be wet for quite a while, quite a ways into the spring season to pick up additional bean acres. But I'm sure they'd try to plant corn first and then go to beans. It's 1 million plus acres that we got to ship somewhere. I think the jury's out on that. I think the intent would be to maybe get it in the corn, but that's going to be, that jury's out, and that's going to be based off of how this March, April weather shapes up for these areas.
Yeah, I've had some clients tell me they may not plant as many corn acres and actually plant more soybeans because they were unable to do much fall tillage or fall fertilizer applications, and just don't have any field prep done. And because of that, they don't believe they'd have time this spring to plant their normal rotations or to even do corn, so that they may shift a little bit more soybeans. And I think you're right that the weather will play a large factor in that, is how many acres of corn and soybeans get planted because of the lack of any tillage and field prep that was done last fall.
Yeah, that's where we're at here in southeast South Dakota, and the states I'll be watching going into the spring season will be South Dakota, Minnesota, the western half of Iowa, Indiana, Ohio. Those were areas that got very little fall work done, got very little fall fertilizer or anhydrous on. And to me, this is going to be a year. This is going to be a year probably where we see a much higher prevent plant acre figure coming from USDA in summer reports, just knowing how much moisture, how full the profile is, and just not a lot of room to add additional moisture to this ground to make that decision easier. So crop insurance rates are going to get set here in February. We will be going into those offices in before March 15th to make up our decisions. I can tell you back here, we're hearing a lot of guys going into that higher percentage, maybe going from 70 to 80 percentile. on the coverage with all the intent of maybe going to capture some prevent plant and then trying to fix these acres during the summer that were wrecked during the harvest season. So,
as we kind of wrap up here, as far as new crop hedging, corn, soybeans, do you have some price targets, some dates that you would start doing something? What kind of a marketing program, early season program can you provide to our listeners?
Yeah, personally, I've been as we move back up. I'll start off with soybeans first. It's the crop that seems to be the most politicized right now. We're in the upper 950, 60 range on November soybeans. To me, it's a spot that says, given the ending stocks of where we're at, 900 plus million bushels compared to last year's 438 million bushels at this time, to me, we got to get a little bit aggressive in getting floors under this crop even right now. To me, when I say a floor, I'm talking at least bare minimum of a put. I do think this is maybe a year where we can get a little bit more aggressive by selling call premium, just for the simple fact that the volatility and everything of the market seems to have gone down, and selling that call premium to maybe capture some dollars or help pay for that put, to me, makes sense to get that done and utilize that strategy between now and any rally that pushes us up to 980. Keep in mind, 980 was a level of support last year when we had roughly 438 million bushels. That range was about 980 to 1060. I think 980 now becomes heavy resistance going into this year. So that's a strategy I like to do. And by all means, I think before we get into that March 31st planning intention, I definitely have some put protection under my new crop. Moving to corn, little bit going into today's report, I was a little bit optimistic about the corn potential. I think that's been tampered a little bit just due to the world stocks, which maybe brings back my targeted numbers for corn on where we can get to. But I still like the idea that a year ago we were 2.2 plus billion bushels of ending stocks in the U.S. Our current numbers right at 1.7 plus billion. It's a nice reduction. We moved in the right direction over the last year. And if we made it to 430 last year, I still think we can get to 430 this year. So that'll be dependent upon the March 30th, the March planning intention report, and then how the spring weather shapes up. If it's a fairly wet and tougher to get the crop in, I fully expect us to get to that range. So I'm going to use 425 to 435 on the December contract as a good targeted area to get aggressive on corn sales and or put option, put call spreads, short futures up in that range, simply because that's an area we've been to for the last 3 years. We will need a production issue this summer to move above those levels and or to settle the political that's happening between the U.S. and China. And until that happens, those would be targeted areas of where I think we can get to and how aggressive I would get. And I would get aggressive. I would get into that 60 to 80% hedged in those ranges.
All right, that sounds good. Appreciate it, Howard. I've got the chart up here of December corn, have the soybean chart as well, so could follow along and what you're looking at as far as targets where we have to go. But we are going to sign off here. We thank everybody for attending our webinar here. We will be back very soon with our Spring Outlook webinar. And in the meantime, follow us on Twitter. Howard has a Twitter account at Howard Cottle, and follow Midwest Markets for market information there as well. Have a great weekend, everybody, and thanks for joining us. We'll talk to you again soon.